15 million members, empowered to learn, to create, to grow, to harvest, to lead, to dream. Equity. Karibu member. Every day, over 15 million members are transforming Africa. $15 million members, empowered to learn, to create, to grow, to harvest, to lead, to dream. Equity. Karibu member. Every day, over 15 million members are transforming Africa.
Will continue to generate the wealth and shareholders' value like it had done before, where we could see the value of shares as marked by the market cap and price at the stock exchange, and splits and bonuses to accommodate growth in value. We hope we were able to go back to that trend that has shown the last 20 years, from 2000 to the year 2000 to 2022, our value of every share growing by a factor of 150,000%, or 1,500 times. So we are excited that the future looks pretty bright. When we look at market leadership, we have managed to take market leadership in terms of performance, but that market leadership and growth is also capital consuming. When we look at capital requirement, capital is measured from two perspectives. The first one on the liabilities you are taking, the deposits you are taking from customers. For every 100 shillings of deposits that you take, you need to increase capital by 8 shillings. So the increase of our deposit during that period has meant a significant increase in terms of capital requirement. And that regulatory core capital has had to increase by 45 billion from a regulatory point of view. And that explains why, while we are performing extremely well, the capital consumption from a regulatory point of view is demanding more and more, and that has been built through retained earnings. Over the last period of nearly 20 years, we have not gone back to the shareholders for capital. The organization has been able to generate capital from internal sources and through retention, and the rapid growth from 600 billion assets base in 2019, end of 2019, to 1.3 trillion has been funded through retained earnings, and has consumed a total of 71 billion, should be able to meet the dividend payout policy of paying a minimum of 30% of available to the shareholders, and continue to like in the past, to fund the growth of the organization. That market leadership is shown by the market. The market has been very kind and generous. By market capitalization, as at 31st December, we were above 50 billion Kenyan shillings bigger than the second largest bank in the market. And in terms of trading at a premium above the average Nairobi Stock Exchange return, trading at 1.1 multiple to the book. So essentially, the performance have been recognized by the market, and the market has rewarded as such. But we expect, as we bounce back to our original trajectory of a return of 30% on average equity, then we'll go back to better multiples. So broadly, that is the capital allocation and the capital rewards in the market and the dividend payout policy. Now, going forward, we have seen the benefit of the social aging. It has really helped to build the brand of the organization. It has positioned the organization. It has strengthened the trust with the host communities. And we have seen that trust being monetized by a premium trading at the stock exchange and premium performance relative to the market. We've decided to tweak the model or the commercial model to include a developmental approach, because we have seen we have funded Young Africa works and got 1.2 million young people work profitably. And we have scaled that now is an African recovery and resilience plan. So we are seeing the opportunity out of this crisis of being the champion of recovery and building back better in a resilient form, preparing the business. Out of this, as the chairman indicated, we are deploying the excess funds of $6 billion or 690 billion Kenya shillings to fund 5 million medium-sized businesses, principally in agriculture, in manufacturing, in trade and investment, and in social impact, and enabling businesses to adopt technology, to use science, and to use innovations to position themselves better for resilience. That essentially would see the bank grow from the current 17 million customers to 100 million customers, with 5 million of those customers being business borrowing customers, and with 25 million individual or consumer borrowers. And this process of funding the 5 million businesses, we believe from the pilot of Young Africa Works, would create 25 million jobs directly and a similar number of 25 million jobs indirectly in their value chain. The distribution of the funding would see us focus significantly in agriculture and food industry, inducing a transformation of agriculture through productivity enhancement and mechanization through partnerships. We also see the opportunity to increase our lending to the manufacturing sector as we see agricultural produce being processed within the region, the mineral wealth or natural resources, value addition being done within the region. And that then will then give us huge opportunities to trade within the African continent, within the global markets, and hopefully become a #1 trade finance bank as we support. We will remain a small and medium enterprise bank, and hopefully 65% of our loan book will remain with the micro, small, and medium enterprises. And the 100 million will be as inclusive as the structure of the society. So that is really what we are focusing on the African Recovery Resilience Plan. It's a 6-pillar plan, as we have said, focusing on value addition, but value addition to be in primary sectors where Africa and the region has competitive advantage, in agriculture and in natural resources, and then enhanced trade and investment. And we have really focused on the African Continental Free Trade Area, the East African Community Protocols, to really scale trade. Trading within the neighboring countries or across the border will become easier as each of the countries enhances its manufacturing and value addition on its primary products, because there are diverse resources from one country to the other. Hopefully, this will also create an opportunity for us to enhance global trade and enhance the region's participation in global trade. As we do this, as the chairman said, we will remain socially and environmentally responsible. We will deploy technologies that are friendly to the environment, particularly in use of clean energy, and in natural resources. We will focus primarily in supporting value addition in clean energy, natural resources. We'll emphasize the need of our customers to use knowledge, to use science, to use technology, and to use innovations, so that essentially we become more relevant to the young people, where the mean age of Africa is 19 years, and also to leapfrog and future-proof disruption on the basis of legacy systems. So as much as possible, we'll try to be as progressive in supporting our customers to future-proof themselves and to leapfrog using technology to achieve competitiveness. So these are the key objectives of the development plan, and that we believe, like the socio-aging has done, the development of the African Recovery and Resilience Plan takes us to the next level beyond social impact to now significant economic transformation. We have lobbied with individual national states in the countries that we operate in, and we have started to test the concept. In December, we took 300 Kenyan business persons to DRC, and we saw that visit ended up with 5,000 Congolese participating in our one-to-one conversations, into exhibitions, and at the end of it, 6 months later, we have generated trade deals that we are considering for financing worth 1.6 billion US dollars. So we have seen the opportunity, the ability to increase trade within the region. Having learned a lot from DRC, we have signed with the East African Community, the African Continental Free Trade Area, so that we can use that platform, the legal platform. And we have been bold and audacious, and we have sold the concept to the Commonwealth countries. We have 22 countries within the African continent, 21 countries within the African continent that are in the Commonwealth, and that then will give us a huge opportunity to also trade with Commonwealth countries outside the region. So that initiative seems to have got traction. It has been embraced by development communities, and we're working closely, selling it, socializing, sensitizing people to be able to scale up the trade and investment opportunity for the region. This then will work hard and complement our social arms with the foundation. It means that the bank is coming closer and closer to the foundation. The foundation impacting on its 6 pillars of scholarships and leadership development, women and youth development, catalyzing micro, small, and medium enterprises to formalize, to grow, and to become global players, focusing on small and medium enterprises, particularly in the agricultural sector, to transform agriculture through mechanization, and of course, looking at the health of the communities, the host communities, and our customers, and supporting the Equity Afya clinics to provide the health, and using insurance instruments to make health much more affordable, while at the same time supporting renewable clean energy adoption, while holding and mitigating environmental change through tree planting. So these two were working hand in hand to strengthen the position of the bank. And then as we move forward, we think the two regions will capitulate each other, will enhance each other, and will also continue to brand. The brand of the bank has continued to receive significant acknowledgement. The performance of the brand has become the envy of many, the pride of our staff and our customers, as the bank that in every segment, In every franchise, it's the best bank in the market that it operates in. Globally, being recognized at the business level, Bloomberg Top 50, Oslo Business for Peace Award. So essentially, we are now seeing that the brand is being informed by the business model, the shared prosperity model, and that has now taken the brand to the next level of the ranking of the top top 500 banks, and Equity is now ranked the 5th most, the strongest or best rated financial brand on earth. So essentially, the branding, the model, the performance has continued to hold this bank. And this positions us very, very well for performance because of the trust, the loyalty that it builds allowed the commercial aging. And in Croatia, we look at the outlook, how the future looks like, and we are confident to confirm the guideline that we have given for our future forecast, where we are seeing growth in top parameters remaining close to last year, between 25 and 30%, and cost-income ratio continuing to come down and enhancing return on equity, as we said, to the trajectory of 2014 of nearly 30% and a return of 4% on asset. We project that we'll continue to maintain a low cost of risk and consequently low provisions, and continue to strengthen the quality of our loan book. We are optimistic we'll continue to grow our subsidiaries, and that by the end of the year, they will contribute 40% of the total assets of the group and at least 25% of the profit of the group. So shareholders, that's the outlook we have. An outlook that has been informed by the strategy that has helped us to mitigate, manage the negative impact of COVID, and to see the opportunities that COVID has brought in, the new green shots that we can see in the marketplace, and also the support that we have given to our customers to retool their business, to repurpose their business, to re-engineer their business, and prepare them for the future that we can continue to share together and building institutions that are resilient in the communities that we operate in, and institutions that can role model building back better, and businesses that are purpose-driven. I thank you, shareholders, for the opportunity you have given me to articulate the performance, the new strategy, and the focus from the strategy. Thank you, Chairman, for the opportunity.
Thank you, Dr. Mwangi. Shareholders, the Director's report was also circulated with the integrated report, and it is contained on pages 128 to 129. With your permission, I shall take the report as read. I now call upon Mr. Richard Njoroge of PwC, our external auditors, to read the external auditor's opinion, which is part of the external auditor's report, appearing on pages 133 to 136 of the integrated report for 2022. Mr. Njoroge.
Thank you, Chairman. Good morning, shareholders. As the Chairman said, I am Richard Njoroge, a partner representing PricewaterhouseCoopers, your auditors. I confirm that we carried out an audit of the accounts of Equity Group Holdings PLC for the year ended 31st December 2021 and issued a clean audit opinion, which is contained on pages 133 to 136 of the integrated report. I will read the Audit opinion paragraphs only. We have audited the accompanying financial statements of Equity Group Holdings PLC and its subsidiaries set out on pages 137 to 248, which comprise the consolidated statement of financial position at 31st December 2021 and the consolidated statement of profit or loss, consolidated statement of other comprehensive income, consolidated statement of changes in equity, and consolidated statement of cash flows for the year then ended, together with the company's statement of financial position at 31st December 2021 and the company's statements of profit or loss and other comprehensive income, changes in equity, and cash flows of the company for the year then ended, and the note of significant accounting policies. In our opinion, the accompanying financial statements of Equity Group Holdings PLC give a true and fair view of the financial position of the group and of the company at 31st December 2021 and of their financial performance and cash flows for the year then ended in accordance with international financial reporting standards and the requirements of the Companies Act 2015. In our opinion, the information given in the Director's report on pages 128 to 129 is consistent with the financial statements. In our opinion, the auditable part of the Director's remuneration report on pages 130 to 131 has been properly prepared in accordance with the Companies Act 2015. Signed, FCPA Richard Njoroge, Practicing Certificate at 1244, for and on behalf of PricewaterhouseCoopers LLP. Signed 22nd March 2022. Thank you.
Thank you, Mr. Njoroge. I now call upon Mrs. Catherine Musakari of Dorian Associates, our external corporate governance auditors, to read the governance auditor's opinion, which is also contained on page 123 of the integrated report for 2021. Mrs. Musakari.
Thank you very much, Chairman. Good morning, shareholders. I am the Managing Partner of Dorian Associates, your governance auditors. Dear shareholders, our opinion, as the Chairman has said, is set out at pages 123 of your integrated report. Shareholders, the Code of Corporate Governance for Issuers of Securities to the Public 2015 requires the board of a listed company to subject the company to an annual corporate governance audit to check the level of compliance with sound governance practices. Our responsibility as governance auditors is to express an opinion on the existence and effectiveness of governance instruments, policies, structures, systems, and practices in the company in accordance with best governance practices as envisaged within the legal and regulatory framework. We conducted our audit in accordance with the Institute of Certified Secretaries Governance Audit Standards and Guidelines, which conform to global best practices. These standards, dear shareholders, require us that we plan and perform the governance audit to obtain reasonable assurance on the adequacy and effectiveness of the company's policies, systems, practices, and processes. The audit involved obtaining audit evidence on a sample basis. We do believe that the audit evidence that we obtained was adequate for us to provide a reasonable basis for our opinion. Our opinion, therefore, dear shareholders, the board has put in place a governance framework that complies with the legal and regulatory corporate governance requirements, and in this regard, we issue an unqualified opinion, signed and dated by myself on the 12th of May 2022. Thank you, Chairman.
Thank you, Mrs. Msakari. Shareholders, as you are all aware, shareholders were given an opportunity to ask questions and seek clarification prior to this meeting with respect to the financial statements and the resolutions contained in the notice and agenda of this meeting. Responses were provided to shareholders who asked questions and sought clarifications prior to this AGM. The responses have been uploaded on the company's websites. Having said that, we will provide an additional opportunity to the shareholders with additional questions to ask them using the questions button on your streaming device or via the mobile phone USSD code appearing on your screen. Please note that we will try as much as possible to respond, but due to time limitations, we may not address all of them. Therefore, all questions received will be collated and the responses will be published on our website after this meeting. Shareholders, let me now invite those wishing to call in with questions to proceed and dial in. Shareholders, your lines are morning. Hello.
Hello.
Good morning. And
Morning, Mr. Chairman, Professor Macharia. My name is Irungu Kimani from Vika. Do you hear me?
yes, Irungu, we can hear you. And please proceed and ask your question.
Yes. Yeah, my first is a comment. You have done, the management and the board has done a comment that has got a good return. Now, even the Image Plus, I want to congratulate them because they have already sent this information earlier to the shareholders. So, and when we are viewing this, we are viewing it clear, and we are here to give several comments. Now, Mr. Chairman, I have a question here, and our first question is about the relationship with the IFC. So I need to be, you need to emphasize on that, and also there is a question on the CEO gratuity. There is an amount, the 2020 and 2021, there is a big difference. And Mr. Chairman, I would like to know why you have reduced the CEO gratuity. So, and he is a good man who works tirelessly to this bank. Another question is about the NPL, the non-performing loan. I can see this is a key audit matter. So, Mr. CEO, Mr. Mwangi, I need to more clarification on that. And there is on the profit and loss account. I have seen the earning per share is 10 shillings and 38 cents. And you have recommended to give us 3 shillings. Mr. Chairman, why did you manage to retain 7 shillings? We could get even 5 shillings. Also, I can see on the balance sheet, there is the retained earnings. There is a lot of money there, 1.8 billion. And there is 15 billion on the share premium. This shows there is a strong balance sheet. But according to the retained earnings, you can give us a special dividend, or you can give us a bonus share. The last question, Mr. Chairman, there is a question that I was just by many shareholders, according to last year, when you declared a dividend, and also you book to Pakia Sasa ni kama shareholders waliniambia, I called, they called me and around 2,000 calls zilikuja kwangu nikiambiwa niwatetee. Sasa mimi nilikuwa nauliza hii ni kama bado tuko Babylon na tulikuwa Jerusalem. Sasa sisi tunataka kurudi Jerusalem, Mr. Chairman. Na ninaona kuna mwangaza mbele yetu, sababu nimeona mmeanza kutupatia dividend ya shilingi 3. So Mr. Chairman, sina mengi leo na chini nawatakia mwaka mzuri. Thank you very much.
Thank you very much, Mr. Irungu, for your several questions. We shall be replying to your questions after we have collated other questions. But thank you very much, and especially for participating so actively.
Thank you very much.
Hello, good morning.
Good morning, Mr. Chair. Mr. Chairman, good morning.
Morning, and how are you this morning?
I am fine. My name is Sally Chepkorir, a passionate shareholder of Equity Bank, a member, and also a brand ambassador. Today I'm very excited. Most of the questions have been answered by the CEO. He's very strategic, but allow me, Mr. Chair, to say this, that it is, we are cognizant and alive to the fact that incredible leadership is a bedrock of every success in any given company or institution. Allow me to appreciate you people for posting incredible results despite COVID-19. My first question is, this one goes direct to CEO. The CEO and heads of businesses and companies like Dr. Mwangi's caliber are keen on building strategy, sustainability, better cash flows, and risk mitigation. Dr. Mwangi, as a CEO, in your mind, is the coming election going to affect the profitability of the company? And how are you rating yourself for this? The second question is on outlook. What is your outlook, or what does the future hold for the company since we are almost half a year? Then the final question is building economy on the youth. Building economy is not simple. What does the company lay in building capacity for the youth and for the women? And finally, I want to thank you, Daktari, for being a trailblazer, a performer, and a role model. Thank you so much.
Thank you very much, Sally. We shall answer your questions together with the others that we are waiting to be asked.
Okay, karibu.
Shareholders, our lines are still open for more questions. It appears like we have answered most of your questions before they have even been asked, which is an indication of that we have a very close, we are very well tuned to your concerns. Yeah. Yeah. So, thank you.
To raise all those. Okay, number one, I just want to take this opportunity to thank you and the board for an exemplary performance. I have seen the CEO saying it is the best performance in almost 40 years in existence, and it is true, figures don't lie. I have seen doubling of profit from 20 billion to 40 billion, earning per share from 5 to 10, a balance sheet of 1.3 trillion, exemplary performance. So congratulations to you and to the board and to the one who is steering the company, the bank, Dr. James Mwangi. Now with that, let me list my questions. And number one is the issue of, on page 55, I hope you have that annual account book. And I have seen that the branches transacted very minimal transaction, or the percentage of the transactions which are being done in the branches are very minimal as compared to digital and mobile and other channels. So my question is, what do you think about the brick and mortar going forward, so that maybe you can reduce your cost to income ratio from the current 48% to roughly 45%, and maybe also thinking of untapped countries like Ethiopia and other countries. Number two is the issue of market share as per country. In Tanzania specifically, I have seen that in Tanzania, you only have 1.7% presence, and there are so many other banks which are ahead of you. And but when I look at Tanzania, I also see that the number of customers in page 78 decreased by almost 40,000. So I don't know what is happening in Tanzania specifically. Your market share is very little as compared to other countries, even the ones that you joined recently. I can see that customers are running away from our bank, losing almost 40,000 customers. So what is necessary is the problem in Tanzania? What is the problem of penetration in Tanzania, where you can be able at least to be at par with countries like Rwanda, which are smaller, Uganda, and even DRC? Number three is about the loan loss provision. It has decreased by a whopping 81%, and this is a very good sign. But with the current economic turbulence, with the cost of mafuta going up, with the general election which is around the corner, and I don't know about how the foreign investors are viewing our country, do you think that the net loss provision of around 4.95 billion is strong shock absorber to enable this vehicle called equity to go through this rough terrain, because actually it seems to be getting rough, also putting into consideration the cost of risk. And then finally, because I know there are many who are calling, I have looked at the loans and advances given per sector on page 222 to going forward, and I can see that there are very many areas of the economy where you have given quite some money. But when I look at one of the sectors called ICT, I think, and something, you have only given 1.5 billion. So don't you have trust in this sector? You have given very little compared to the others, and I know now the country is heading toward digital, toward everything. So when you give that very little money, I don't know what you are looking. And then to end, the revenue in South Sudan decreased by over 90% from 2.4 billion to 200 million. What resulted to this? Otherwise, I want to thank you so much. Thank you. I wish you the best. I wish Dr. Mwangi the best as you steer this bank forward. And we wait to hear you in Ethiopia and in West Africa and in any other places where we can be getting a dividend of 10 shillings per share. Thank you very much.
Thank you very much, Daniel, for not only your comments, but also for your questions. We shall come back to your questions later. Thank you.
Oh, thank you.
Hello.
My name is Aldao Jones.
Good morning, Mr. Jones.
Yes, my name is Aldao Jones from Machakos. I want to start by commending you and your board, chairman and your board, and Dr. Mwangi's management for keeping our bank in a payout dividend organization. This is very great. Mr. Chairman, I want to jump to Mr. Mwangi and ask him, during the pandemic, SMEs, what assistance and what product did he make for an assistance to the SMEs to be able to operate? second question is we are now approaching trade lending, which will enable people like importers, like construction people, and other people in urgent need of borrowing to make sure their business are sustained during this difficult time. We got that product. The other issue is that he has elaborated very well on the regional business of DRC. As the DRC broken out, is there a breakout on the we expect profit? The elaboration was very good, but he didn't say whether we are due for profit when. I want to ask also to tell him, he did not mention about Sudan, and we know there are prevailing problems in the Sudan which may be causing our business to go down. He has not told us which position we stand in Sudan. I want to tell the shareholders that the dividend which was not paid last year has given us a very bright accounts which nobody can ask. It has supported the business during this pandemic time, and we have seen the business has grown best to our knowledge. I want to congratulate Mwangi because I am the first person who asked a question to you people to have interest on agriculture business, and he has today said you are now spending money in uplifting agriculture business. In line with what I asked with the agriculture, I also asked you to put keen interest on tourism business, because tourism has a boost from time to time, which I haven't seen equity coming up with it. The other thing I will ask Dr. Mwangi is to make some provisions. We enjoyed 35 years last year, and shareholders did not enjoy our business. I know he's against on bonuses in terms of numbers. I will want to ask him to start putting some provisions, these people to enjoy a shilling on a dividend during the next enjoyment of a good years. With those few words, thank you very much. Thank you, and I wish you best.
Thank you very much, Mr. Jones, for your comments and your compliments, and also for your questions.
Thank you.
Yeah. Thank you, shareholders. Thank you for those questions. They cover a wide range of topics, and like we said, some of the questions were already asked before the AGM, and we will be answering these questions shortly. But before we proceed to respond to the questions, we shall provide you with the guidelines on how to cast your votes for the resolutions placed before this AGM, as summarized in the notice of this meeting. Please watch the upcoming video, which will guide you on the voting process.
Welcome to Equity Group Holdings PLC Annual General Meeting. Once voting is opened, you will receive a code on your phone with guidelines on how to vote. Once voting is open, you will receive a prompt on your mobile phone or email asking you to key in and dial the code using your mobile phone. You will be required to follow the prompts to cast your vote. The voting process will be as follows. Registered members will key in and dial the code *483*851# from any mobile phone network in Kenya, or *370# for Equitel lines. You will then be prompted to select your preferred language. Once you choose your preferred language, the next prompt will be as follows. Welcome to the Equity Group Holdings PLC. Reply with 1. Once you have responded, you will receive the following prompt: to approve the annual report and financial statements for the year ended 31st December 2021, together with the reports of chairperson, directors, and auditors. Reply with 1 if in favor, 2 if against, or 3 to abstain. Once you have responded, you will receive the following prompt. Continue following the same prompts for all other resolutions. Once the vote is made, you will receive this final prompt confirming that your vote is accepted. For voting using the live stream dashboard, you will receive an SMS with your live stream link. Once you click the link, you will find the vote button on the dashboard. Click the button and thereafter click the voting options of your choice. Once completed, click the Vote for Motions button to complete voting. Closing of voting will be announced by the chairperson. Results of the resolutions voted on will be published on the company's website within 24 hours following conclusion of the AGM. That your vote is accepted. For voting using the live stream dashboard, you will receive an SMS with your live stream link. Once you click the link, you will find the vote button on the dashboard. Click the button and thereafter click the voting options of your choice. Once completed, click the Vote for Motions button to complete voting. Closing of voting will be announced by the chairperson. Results of the resolutions voted on will be published on the company's website within 24 hours following conclusion of the AGM. Welcome to Equity Group Holdings PLC Annual General Meeting. Once voting is opened, you will receive a code on your phone with guidelines on how to vote. Once voting is open, you will receive a prompt on your mobile phone or email asking you to key in and dial the code using your mobile phone. You will be required to follow the
important, insightful, and strategic questions that have come from you. And I wish to let you know that we also have streamed questions, and we have shareholders logged in from more than 30 countries all over the world who are participating. I especially want to acknowledge the fact that the quality of these questions indicate that shareholders have gone through our integrated report. I will start with the first question that refers to the CEO's gratuity from Mr. Irungu Kimani in Thika. Mr. Irungu, I acknowledge your concern for what appears in the integrated report, and appears to show that the CEO's gratuity was reduced from 2020 to 2021. The actual fact is that the 2020 gratuity covers some arrears that had not been paid over 2 or 3 years. So we have not reduced the CEO's gratuity, and the CEO's gratuity is covered under his contract. So rest assured, we are taking good care of the CEO. Thank you. I will now request Dr. James Mwangi to answer some of the other questions. Dr. Mwangi.
Thank you, Chairman. Shareholders and investors, as the Chairman has said, very uplifting questions. Mr. Chairman, there are another 8 questions that has been asked online. Allow me just to touch on a few. The first one is on value creation. The question was on our plan to increase value for equity shares. Shareholders, our greatest focus is to ensure value creation for shareholders as a reward, as a return to the risk they have taken, the investment they have made in the company, and for their belief and faith in the organization. Value creation is reflected in 3 aspects broadly. The first one is on brand creation. The greatest value is normally extracted from the strength monetizing a brand. And we have really built an iconic global brand far beyond the boundaries of the region we operate in. That's why we won the Oslo Business for Peace Award, being celebrated globally for the trust that we have earned from our host communities, from the shared prosperity model that we have learned within the communities. That's why we are among the top 50 brew bank last year, and broadly, in terms of performance, ranked very highly, but most important, being ranked the 5th best finance brand on earth. That to us, that brand then becomes very valuable in the sense that we can create enormous value, monetize that brand. And that is what we are doing by creating other businesses like insurance to leverage on that business. And it was not surprising that our life insurance was able to break even and make profit on the first 3 months of operation. And it's simply because the brand is trusted, and so people buy the brand. The second area that we have built on is creating value in terms of returns, in terms of profits, and I'm glad the shareholders are tracking even the increase in earnings per share, and then splitting the value so created, paying shareholders in cash in form of dividend. And I'm glad that this year we are seeing a 50% increase in dividend payout from previous 2 shillings to 3 shillings. And I said we see 7 shillings have been retained to finance growth and to meet regulatory requirement, again, which is best reflected through the capital markets that drives the price. That's why equity enjoys a premium above all other stocks in the market. So those 3 perspectives of value creation is what we are focusing on, is what the strategy is all about, and we will continue to strengthen. That strategy has worked very well for us. For 25 years, we sustained a 10-fold growth every 5 years. That generated splits and bonuses, share issues out of the retained earnings that funded that growth. And that is why a share that was valued 20 shillings in 2000 is now 600 shares out of bonuses and splits, and each share at 40 shillings. As at 31st December, it was as 50 shillings, and that is how we could see the shareholders' value or investors' value growing at a rate of 150,000%, 15,000 times in a period of 20 years. The second question, Mr. Chairman, is on the future of Equity Afya. Equity Afya is our initiative in the health sector. Equity Afya plays two big roles. The first one is mitigate the risk of default by our customers. We realized 40% of all default arose when a health incident happened within a household, and all the cash flows were directed either to attend to the ill health, or either through outpatient or inpatient, and in the process default occurring on the loan. And we thought we could address that by issuing a health insurance product, mitigate that, and accredit life against every loan in case of loss of life. Those two products worked very well, but unfortunately the supply side failed us. The demand that we generated was too high, such that the supply side, the health clinics, the hospitals couldn't cope with the numbers. And we decided to complement the supply side by creating a franchise for our university students. The students that we had sponsored to university, 1,800 had done medicine, and we felt we could create a franchise for them and provide high quality, affordable health for our customers and the public in general. Last year, Equity Afya clinics attended to 701,000 patients. This year, we target they will be able to attend to 1.8 million patients. The number of clinics is projected to grow to 200, covering the whole country. And we see in partnerships with the Warren Buffett Foundation, we may be able to scale the clinics in all the countries we operate in and support our customers and the public and host communities with quality, affordable health care, and which we can support using Equity Afya. For the general insurance that we may be venturing in, health insurance will be the primary product because then we are able to issue policies and we are able to provide the health services using the Equity Clinic. I'm excited about the third question about how Equity Group is cushioning staff against the high cost of living. I'm glad that the shareholders appreciate that we achieve our results through our staff. We have intensified our efforts to mitigate the high cost of impact. And this year, I'm happy to tell the shareholders, the first thing we focused on was giving our staff an opportunity to enhance their retirement benefits. And shareholders, investors, we now have the highest pension contribution of up to 20% of salary on monthly basis, such that in every 5 months, an employee is able to preserve. So in a year, we'll have almost contributed 3 months of salaries as a part of the pension. And I guess it's the highest pension contribution within the region we are operating in. The second one, we looked at the health, because health is the biggest cost, and we comprehensively provided health cover to our staff and to their families so that the pain of ill health is cushioned against all our staff. This third one is a proposal we're coming to and we're working with. We've been consulting the shareholders, an employee share ownership scheme, so that as the employees work for the investors and shareholders, they will be working for them. And I want to really appreciate the shareholders who have given us insights as to how to structure that share ownership scheme that meets the approval of the shareholders, meets the aspirations of the employees. And the last one, is beyond the issue of looking at incidents that may happen that threaten lives of our employees and how their families would be left. And I'm happy to say we have created a very comprehensive, integrated employee life insurance scheme that would adequately provide for financial and livelihoods of families in case of unfortunate incidents of losing an employee. And lastly is the salary, and I'm glad the board commissioned a comprehensive review of salaries for all the employees. And this year, it has taken long. It took us to employ 3 directors in HR because the board wanted it to be integrated and provide adequately, driven by 3 perspectives: reward adequately, retain staff that are high performers, and more importantly, be competitive in the market. And I'm glad as management we'll be tabling we have completed the exercise, and we'll be tabling that to the board during the July board meetings for approval. So it's a very comprehensive. I think the fourth question, Mr. Chairman, that investors have asked is the dividend. Can it be capitalized? We have a history of capitalizing a dividend whenever we retain significant amount that is capitalized. Shareholders are given in form of shares, and that is why a share in the year 2000 is now 600 shares. All that increase of 600 times is through splits and bonuses, which is capitalization of retained earnings and foregone dividend. And I believe with the markets providing the right price, because you want the price in the market to be right, the par value to be right, the board would consider, like it has considered in the past, to issue splits or bonus shares for the retained earnings. The credit administration, the question of envisaging lending to investors loans at favorable terms, the relationship between shareholders and the bank is governed by regulation, and the regulations are such that shareholders cannot get preferential interest rates. Board of directors cannot get preferential rates, including your managing director. I can't get preferential rates. I can only get rates that are applied to the customer. So it applies to executive directors, directors, and shareholders. A general comment that, Chairman, I want again to appreciate the shareholders to see the focus, the equity anthem. The shareholders are saying it's very inspiring, and whether it could be considered as a commercial advert to inspire shareholders and to reinforce the faith they have on the organization. The seventh question, last but one, is how are we prepared for the contingent effect of inflation in U.S. and war in Russia? A question from a customer in Germany. Shareholders, investors, it is true that the world has been reset by the COVID crisis and the Russian war. We have seen the global supply chains completely broken. We have seen the Russian war creating ideological considerations in what would be economic considerations, who you do business with, where you set business seems to be now being influenced by ideological considerations, and that, of course, is a huge disruption. The issue of embargo on Russia has had a significant effect on price of food and energy, given that 35% of grains came from the two countries in conflict. As a result, that inflation, particularly in food and energy, is to the tune of about 45% price increase. And that has very significant implication on livelihoods and disposable income for all. And that is bound to have significant impact. We have considered all these perspectives, both inflation and the effect of the conflict between Russia and Ukraine. And we have strategized around it. The first one was really to help customers who were dependent on those supply chains to repurpose, to retool, and to hopefully look for new opportunities. The good thing, every crisis, like this one, like the Russian-Ukraine conflict, brings an opportunity. The increase in price of wheat by 35% means marginal farmers could still be able to do wheat farming very profitably. And as a result, that gives us a huge opportunity to support agriculture, to fill the gap, and to plug into the deficit in the agricultural sector. So agriculture has given us a huge opportunity because we have to establish local and regional supply chains. The second one is both COVID and the Russian-Ukraine conflict has brought to question the issue of globalization, the issue of dependence on a country because of inability to access supplies when most needed, like we saw with the PPEs, the broken global supply chain. And we have seen a huge opportunity to build local and regional supply chains. But there will always be unintended consequences, and we are seeing that strain in terms of repayment as cash flows are being disrupted, and we have steepened. Fortunately enough, we had steepened selected credit risk sharing guarantees. And shareholders, if you look at our provisions on our loan book, we have made cash provisions of all the way to 95%, but we have increased that coverage by another 27%. That has taken our coverage on NPLs to 127 using credit enhancement guarantees. So we are cushioned to the extent of an additional 25% above the current NPLs. And we had really carefully selected the loans that we could cushion ourselves in case of the consequences of prolonged impact of both the Russian crisis and the COVID effect. The last question is strategy and business, and what is the impact of the current conflict in DRC on the company's operations? DRC is going through a challenging time on the eastern region. It's in 3 regions out of 27 regions. So we don't want to create the impression it's an isolated situation, but the impact would be on 4 branches out of 86 branches, the physical impact. But conflict in a country, in a region in a country is a conflict in the country. So there will be unintended consequences. But the actual conflict is affecting 4 branches. The branches are in urban centers, but the conflict is in remote areas. So we haven't seen the huge adverse effect, but prolonged conflict would certainly lead into the challenges. Mr. Chairman, those were the online questions. Now we can focus on the 4 questions. The first one by Irongo Kemani. Thank you, Irongo, for your generous commendations to the board. And the relationship with IFC. IFC is the International Finance Corporation, is the private sector arm of the World Bank. We are very, very humbled that the World Bank has decided to invest and become an investor and shareholder within the equity group. What has really humbled us is that IFC decided to buy the shares from the market. They didn't come to the bank to ask for an opportunity to invest. They got attracted to equity group as an investment and bought the shares in the market. We were pleasantly surprised by that move. We started to study, and we saw that is the first time IFC has bought shares in the marketplace in Africa. So it was very, very humbling. We tried to engage. We invited the president of IFC to the bank in February to welcome him and understand. And he told us there were 3 reasons that IFC decided to invest in equity group. The first one is the business model. I said it's a very unique model that has a twin engine, a social impact and a commercial impact. And that is very unique. It's a purpose-driven model, which then is shared prosperity model. That's what, and he said that it has future-proofed itself by integrating the interest of community. The second aspect I talked about is the governance structure. They had studied the governance structure, and we have been consistent over a period of 30 years in upholding our governance structure, the strength of the governance structure, and continuously improving. They talked about the quality of the board, managing those structures, the quality of the management, and the policies and the practices of the bank. So that was the second reason IFC invested in the bank. And the third one was that they would like to associate with a global brand that is shaping the world. And that reminded us the Global Vision Award we won in 2007 during the G8 summit in Germany. And the caption of the award was "Initiators of a Concept of the Future that will shape the global economy." And broadly, it appears that what the AFC have seen, the model that is purpose first, and consequently will all model the way it is. The question we then asked ourselves is, how could we use IFC as a shareholder? And we realized that IFC, being part of the World Bank, brings in significant reputation, brand association, that could only enhance our standing in the financial circles. But we reached out and said, can we benefit from the capabilities and competencies of IFC? And I'm glad IFC's response was in the affirmative. And during the month of May, I'm glad to report to the shareholders. They gave us a team of 20, and we spent 4 days with them thinking about strategy and thinking about the African Recovery and Resilience Plan. And the endorsement of that plan made it to be adopted by 16 development banks. And that was the basis on which we presented it to national government, presented it to East African Community, African Continental Free Trade Area. So we have turned, like we do to all investors, like we have done with allies, asking where can we work together and seeking support. And so we will continue to leverage on the global capability and reputation of IFC. The next question was NPLs. It is true, Irogo Kemani, that our NPLs showed a significant reduction, 81% reduction. And principally, I want to really applaud the initiatives that our credit department, headed by Emmanuel, the risk management team, the initiatives they have made to help customers to navigate, to mitigate the impact of the market. And we are very optimistic. We have kept on observing the loans, and we are optimistic we'll be able to improve our quality loan book, suggesting there will be no necessity of increased, hugely increased provision. However, we'll continue to take provisions for the general provision, because the growth of loan book, the 30% growth rate in loan book, will require that additional loan book to be provided up to 2%, and that will be most likely the provisions we'll see. This, the last question, shareholders from Kimani, is the question of the payment of dividend. The earnings per share is 3 shillings. And then the question, the earnings per share is 10 shillings. We are paying 3. Couldn't we have paid 5 and retained the 5? And this is a balancing act. Maybe shareholders, from a regulatory point, for every shilling of depositors, for every 10 shillings of depositors' money we take, we have to increase our share capital by 80 cents. For every 100 shillings of deposits we take, we have to increase shareholders' capital by 80 shillings. Over the last 2 years, Mr. Irogo Kimani, our deposits have increased from 482 billion shillings as at 31st December 2019 to 958 billion shillings, an increase of 476. That is almost doubling. We have doubled the deposit base within those 2 years. The regulatory framework to support that growth of deposit demands shareholders to increase their capital by 38 billion shillings. And so while we retained, like the year we withheld dividend, that was the year we experienced a 54% growth in deposits. And as a result, we had to really increase capital. And instead of going to the shareholders and saying, please increase capital, we opted to use cash generated within. If we look for, once we generate the deposits, if we deploy them into loans, we also need to increase capital to the rate of 14.5% of the entire loan book. So during the 2 years, our loan book increased from 385 billion to 632 billion, and that is what is driving profitability. But that increase of 247 billion in loans required an additional 36 billion shillings in capital. So when you take the 38 and the 36 billion, we find we had to increase capital by 71 billion shillings or thereabout. And that is the capital that is funded by the profits. And that is why we retain 7 shillings to fund the 70 billion shillings that is required as capital. And we then pay the shareholders the 3 billion. Last 2 years, we were performing, return on equity was below 20%, and that is why we couldn't be able to pay dividend and then also retain adequate capital to fund the growth. But I'm happy to say with the first quarter, we have seen a return on equity of 27%. It means we can now be able to pay 30% of all available and retain the balance to fund the growth. So, and continue to issue bonus and split shares to the shareholders. At the moment, if you look at our capital ratios, they have declined by 3.4% from what they were before COVID. So despite retaining that, our capital health has declined a little. It looks a very huge figure, but from a regulatory point of view. So that is the delicate balancing act that we have shareholders to keep on balancing. The good thing is that when the capital markets are functioning, where there are no shocks, then the retained earnings are reflected in the price of shares. And people then can appreciate that the return is appreciation in shares and dividend payout. So it will always be good to look at the two. That leads us to the second question by Khalil about what is the likely effect of the elections on 9th of August in our largest subsidiary, Equity Bank Kenya, that controls 60% of the balance sheet. Our analysis, and particularly borrowing from the experience of 2017, when we did elections. The elections were, the presidential election was nullified by the courts. The courts made their decision to repeat the elections. They were repeated. We are persuaded to believe that the country has matured, has developed institutions, whether it's the constitutional courts, whether it's the Independent Electoral Commission, whether it's all the other commissions, to allow the country to have peaceful elections. And we have taken an optimistic view that Kenyans will go to the vote and do election, accept the results, and move on. And if they are contested, the judicial system will do its work, will give the verdict. To ensure that we don't put ourselves in an awkward position, we have maintained very stringent governance structures of being apolitical. We have no inclinations whatsoever into politics. We have no preferences. We know our 17 million customers are spread through all the interest in politics. And so as an organization, we ensure that we completely remain neutral and apolitical. And that then helps the strong governance structure insulate the institution as an organization, but we are also optimistic that the progress the country has made in education, in governance structure, in the new constitutional framework, we shall have peaceful election. However, we have, as I said, ensured we have maintained a buffer of 25% credit guarantee enhancement, because in case there is challenges, the challenges will be reflected in quality of loan book. We have maintained a 64% liquidity ratio so that we have sufficient liquidity buffer, and we have said we have strengthened our capital base and we have strengthened our reputation. And lastly, we are mitigating sovereign risks or country risk by continuing to diversify our business, and we are happy that 40% of the entire business today, it's outside Kenya. So we have made very, very good progress to mitigate such an electioneering period. So as Kenya will be going through our electioneering period in August, and we have been, the other countries where 40% of the balance sheet is, will be looking different. The second question from Khalil is future outlook. I put a lot of emphasis in my presentation on this. We are very, very optimistic. And as we have indicated with the first quarter results, all indications is that we shall outperform last year's performance and register much better performance in all parameters of the bank. So we regard that as a positive outlook, despite the concern about youth. The third question from Khalil is building capacity for youth and women. A country that doesn't invest in its youth is busy burning the future. Being aware of that as a leading organization, controlling 13% of the GDP of the country, we have decided to provide leadership. And that is why we have launched Young Africa Works. And during the last 2 years of COVID, we have trained 683,000 young people. We have loaned 240,000. They have created 1.2 million jobs. They have become our pride. Young people have become our pride. They have embraced the bank. During the COVID period, we have grown our number of customers by 2.5 million, while the Kenyan banking industry have the total banked population have declined by 4 million customers. Yet ourselves, we have grown with 2.5 million. If you look at the adoption of the digital self-service platform, it's young people, and the only way we can reward them, we can attract them, is to invest in capacity building. Anthony Kiogora leads us in the foundation in training young people. We have financial literacy, we have entrepreneurship training to capacitate them to be able to use the tools and the products and the services of the bank. And we have remained completely focused to changing lives, giving dignity, including to young people, and expanding their opportunities. So we'll remain focused on our purpose, and our purpose then covers the aspirations of the young people. The third question from Daniel Kimotho. Thank you, Kimotho, for your compliments on exemplary performance. The observation that only 2% of all our transactions are now on brick and mortar, and 98% of our transactions are on digital platform is correct. And so your question is, what do we think of the brick and mortar? One, we have decided to create a unified brand, the One Equity, suggesting that infrastructure can be used for many purposes. It can be used for bank assurance. But that branch network has now become our focus for creating centers of excellence, capacity building centers that then relate with the community, and anchoring third-party infrastructure and partnerships. At the moment, we have 360,000 pay with equity merchants. They are all anchored in the branches. So the greatest responsibility of the branches now is to manage the pay with equity merchants. We have 36,000 merchants, regular merchants. Again, that needs are anchored in the bank. And we have about 150,000 agents of Equity Bank. So branches are now hubs of third parties who we used to do. They are also the training center, and they have also become very hardy for recruitment. That's why we are growing quite fast. They are the physical presence of the brand on the ground, but also importantly, they have now become centers for SME and large enterprises that needs interactions and relationships, and they are centers of relationship management. A question on Tanzania from Daniel Kimotho. Yeah, it's true. We have emerged the largest bank in Kenya. At the end of last year, we were the second largest bank in Rwanda. We were number 5 largest bank in Uganda, second largest bank in DRC, but remains bank number 14 in Tanzania. So your observation is right. The only thing I would say is number 14 out of 54 banks. So we have made huge progress, knowing that we have only been in Tanzania for 11 years, but we can do better. But we have always told you the truth. We had a challenging beginning in Tanzania, and we had to restart all over again. We were left with a very high non-performing loan book. That's what we have focused on. And that, of course, brings a little bit of conflict. But we seem to be weathering it very, very well. We are seeing the country taking a very progressive steps. The latest announcement by Her Excellency President Sururu that 2 weeks ago that government should not be in business and should leave that to the private sector is very, very encouraging. The policies, particularly cross-border, we have seen the trade between Tanzania and Kenya grow sixfold in the last 1 year since our last visit in Kenya. It's very good indication. The BRAD has become strong. We have used the regional BRAD, and we have started attracting very high caliber of staff, and with the right staff, we believe we will be able to achieve the right results. In terms of loan loss provision, as we said, we have adequate coverage. In terms of inflation and election, we have tried to answer that. In terms of loan to digital and technology sectors, we agree with you, we are low. But if you look at the African Recovery and Resilience Plan, Pillar 5 focuses on nothing else but the use of knowledge, use of science, use of technology, and use of innovation. And that is a bold indicator of our focus if we can make the digital world one of the 6 focus of driving recovery. We believe, like you, that we can only future-proof ourselves if we embrace the tools that young people who constitute maybe 80% of the population would be comfortable with. And we will endeavor to drive innovations and technology adoption by financing. Unfortunately, most of the global technology and innovation drivers, our partners, Microsoft, our partners, Google, our partners, MasterCard, Visa, they are all global companies. And what we really need to do is to really support the innovation hubs. But unfortunately, innovators and startups tend to look for capital as opposed to debt, and that is where we have been missing out in terms of supporting. But as that sector grows, I'm sure the opportunity will continue to grow. South Sudan, we take note of it. It is since 2013 when that country missed a step, and since then we have operated South Sudan on a maintenance basis, trying to minimize its effect on the adverse effect on the group. And broadly, what really reflects the incomes is purely accounting for inflation, accounting for exchange rates. That is really what inflation accounting is what keeps on creating the shocks in the flow of incomes. So to a great extent, that maintenance state investment. The last questions, investors and shareholders, came from Mr. Jones from Machakos. Once again, thank you very much, Jones, for your kind compliments. The question you have is, during the pandemic, the support we gave the SMEs. The greatest support we gave to the SMEs was relationship management. We believe the bank has very significant capabilities and competencies at the management level that we put to use to hold the SMEs. We helped them to see the opportunities, the green shoots in the economy. We helped them to repurpose their businesses to address the tools, and we accommodated them in terms of restructuring their loans to ensure they continue to support their promoters or the households, and to a great extent that they survived. The quality of the loan book we see of Equity reflects the quality of our SME clients, and that is because of that mutual relationship of structuring them. We have intensified our support through financial literacy and entrepreneurship, and the biggest beneficiaries of Africa Young Works are SMEs run by young people, and that is where the greatest support is, and that's where the support. In the African Recovery and Resilience Plan, pillar number 4 is about formalizing micro, small, and medium enterprises and introducing them to the formal sector in the agricultural sector, in the mining sector, in the trade and investment sector, in the technology sector, and ensuring we populate the formal value chains with our micro, small, and enterprises, and that is why we are capacitating them to fill that gap. You made a very good observation about trade finance. Given the increased trade opportunity within the African Continental Free Trade Area, the opportunities within the Commonwealth countries, we see we can ease the pain of financing for trade using smart trade tools like trade finance. We're using derivatives to do hedging for our customers, and we're using guarantees and such tools to ensure that payment is against delivery in the international trade. So we see huge opportunities to support them, to drive the recovery of the economies. The economies will only recover if the micro, small, and medium enterprises recover, because they constitute 96% of the economies, or the GDP of the economies that we operate in, and they are the biggest bet. The question on DLC and profit, we are seeing very positive signs on DLC. When we bought BCDC, the cost-income ratio was 96%. If you looked last year, we achieved a cost-income ratio of 66%. We're very optimistic that this year will bring the cost-income ratio to approximately 60%, and that decline of cost-income ratio of DLC, which is now a balance sheet of $4 billion US, will mean that we'll see DLC becoming a significant player in the profit contribution of the group. We'll continue to nurse South Sudan, maintaining it to reduce negative impact and intended impact on the performance of the group, and we'll continue to pray for good days to come. I think I've addressed heavily about the dividend we held, but I'm glad you have related it to funding the growth, and I'm glad and hopefully our investors and shareholders can understand that to double from 600 billion asset to 1.3 billion asset, we needed an additional 71 billion shillings to meet the capital requirement of taking the deposits from 400 billion to 900 billion. But I'm also glad that you have brought to fore the need to encourage us to look into other opportunities that might open. You mentioned Ethiopia, shareholders, investors. We have a rep office in Ethiopia. It's the only country I know that has never opened to international banks to invest in the country, and so it presents a huge opportunity as and when it opens. And we have strategically positioned, and we trust and believe when it becomes clear. His Excellency, the Prime Minister, has pronounced himself. He has said that they have put the regulation to Parliament to allow international banks, starting with regional banks. We see that as a huge opportunity. And when that opportunity comes, then we'll come back to you and say we need more capital. and hopefully you will then understand if the retention remains the end. The guidance that you have made on agriculture, we believe that with the disruption of global supply chain, with the situation that has happened with Russia and Ukraine, Africa will become the next grain basket for the world. With the constraint that has happened in Malaysia and Indonesia, in edible oil, palm oil, I believe Nigeria and DRC will bounce back to where they used to be, number one and number two largest palm oil producers in the world. And that gives us a huge opportunity for agriculture. I believe a country like Tanzania, and we are working closely with them, their southern corridor will become a huge agricultural region. And we are aligned. And that is why we have said in 5 years, we hope 30% of our lending will be in agriculture. We have seen the proportion of lending to agriculture grow from 3% 5 years ago to 14% today, and we hope in the next 5 years we'll reach our aspiration of reaching 30%. We see agriculture to be exactly the same like the micro and small enterprises that we focused on. We developed capability and competence, and we became the king of that segment. If we become the king or queen of the agricultural segment, then again, that will be a huge opportunity. We take note of your advice that we also consider tourism, and that we consider dividend, and we keep on debating, Jones, with you, investors and shareholders, the balancing act between dividend payout, funding growth, and expansion. That delicate balance we'll focus on it to ensure we maximize value and we take advantage of all opportunities to position ourselves. Shareholders and investors, because of the retention strategy of dividend, maybe we could reflect back that 30 years ago, we were number 66 out of 66 in Kenya. Today, 30 years later, we are the largest bank, 200 billion shillings bigger than the second largest bank, and we are the largest bank in East and Central Africa because of that delicate balancing of dividend payout, retention, enhancing and appreciation in value, and giving shareholders the choice of dividend payout and cashing out appreciation from market, and giving management the tools to grow its size and enjoy the economies of scale. Despite a 30% growth rate last year of our balance sheet, we still were able to maintain our cost-income ratio. There is a lot of benefits of size. The economies of scale grow, the advantage of shared services is very central as we become a regional bank. Risk mitigation becomes central. But as we have said, we'll balance this. We'll continue to interact with you. I want to encourage all of you shareholders. Every quarter when we are releasing results, we make a call. We invite shareholders, and we encourage you to share with us your contacts, the ones that you'd like us to invite you on the call, so that we can be conversing every quarter as we review our performance. We take your insight. Today has been a very productive day of interacting with you. That's why we have taken the questions on that has come online, all of them 8, because that interaction is very, very helpful. I think the last question is information on the business and performance of the individual subsidiaries. And I want to draw your attention on page 72 to page 83. We have detailed every subsidiary and how it is performing, the position it's occupying in the market. And as we are saying, diversification is our strategy of managing the sovereign risk. Shareholders, allow me to invite my Executive Director, Mary Wamai, in case I've glossed over a question. She's the one who manages the subsidiaries, and she's also in charge of governance and leadership. Maybe to add on, Mary, with your permission, Mr. Chairman.
Yeah.
Mary?
Thank you, Mr. Chairman. Thank you, Dr. Mwangi, our CEO. James has actually covered in details all the areas that have been raised by our investors, but I think I just want to emphasize really what drives this group. And I would say that, and I'm also happy that our boards have also really emphasized that this group is going to be driven by just one thing, and that is commitment to its stated purpose of the group, which is the purpose of transformation. And that is why, even amid this crisis, the group has had to go back and ask ourselves, what is it that we can do to support our customers, to support our communities in all the regions that we operate? And we are happy that we have been committed to that strategy, and we have found an execution business model that really delivers to the various communities that we support. The other thing that we emphasize on a day-to-day basis, and this one is to all the people within the institution, is the culture of the organization. We have zero tolerance to any deviations from the stated culture, and agreed, because that is what solidifies us as we move towards the achievement of the stated objectives of the institution. And we are happy to note that we have been very able to establish a very strong value system throughout the institution, including the new subsidiaries that we have set in the region. We have emphasized, and they are being trained. The managing directors are on the ground with the people, or just every day emphasizing what is really important to this institution. And the commitment 100% to principles of corporate governance of the organization. And that is what has really brought us this far. This is what has given our partners very good confidence levels, very high levels, and that is why you can see partners like IFC have come on board and said, we really want to work very closely with you and be part of what you are delivering. We want to be partners so that we can also achieve our objectives accordingly. So the commitment we want to give you, our investors, is that we are going to remain on that trajectory, and we are going to remain committed to those ideals and those principles. And we are going to every day look back and ask ourselves what has brought us this far, and what are those minimum principles that we can never deviate from, so that we can be able to really serve our people devotedly and with one commitment and one purpose. So I want to thank you all for all the support that we have received throughout the region, and also looking forward to another successful year. Thank you, our investors.
Thank you very much, Mary. Investors and shareholders, I thought Mary would add that we remain very confident about Tanzania. We regard it as the highest potential market. We are looking at the strategy of Tanzania. We're investing heavily, constantly in Tanzania myself, and we believe that in the fullness of time, we'll all be proud of what Tanzania will be able to contribute to this group. Thank you very much, shareholders, for giving us an opportunity to respond to your question, but more importantly, for helping us know where you are and how you view the business and how you think the business through your questions and comments. And we encourage you, the platform remains open. Continue giving us the questions, and we'll continue to answer the questions on the platform. Thank you very much. Chairman, over to you.
Thank you, Dr. Mwangi and Mary. Shareholders, I trust that we have given adequate consideration to all matters contained in the integrated report and the questions that you have raised, and we have now closed the question and answer session. Shareholders, we will now commence consideration of the proposed resolutions, and before we go through the resolutions, I want to just let you know that the voting will close at 2 p.m. For these resolutions. But we presume that many of you have already read the resolutions and voted. Turning to the resolutions, Agenda 1 is to receive and consider and adopt the audited financial statements for the year ended 31st December 2021, together with the chairman's, directors, and auditors' reports thereon. I will request the company secretary to read out the proposed resolutions with respect to the financial statements contained in the integrated report, pages 137 to 248, and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to receive, consider, and if thought fit, adopt the audited financial statements for the year ended 31st December 2021, together with the chairman's, directors, and auditors' report thereon. Chairman, Lydia Cherotich has proposed and Charles Irubu has seconded the motion.
Shareholders, the resolution to adopt the financial statements for the year ended 31st December 2021, together with the chairman's, directors, and auditors' reports, has been proposed and seconded. I now put it to the meeting for voting. Agenda 2 is to declare a first and final dividend of 3 Kenya shillings per share in respect of the financial year ended 31st December 2021, as recommended by the directors on page 128 of the integrated annual report. I would now request the company secretary to read out the proposed resolution and confirm if we have a proposer and a seconder.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to declare a first and final dividend of 3 Kenya shillings per share in respect of the financial year ended 31st December 2021, to be paid on or about 30th June 2022 to the shareholders in the register as at the close of business on 20th May 2022. Chairman, Sally Kibor has proposed and Teresia Karaoke has seconded the motion.
Shareholders, the resolution to declare a first and final dividend of 3 Kenya shillings per share in respect of the financial year ended 31st December 2021, as recommended by the directors, has been proposed and seconded. I now put it to the meeting for voting. Shareholders, Agenda 3 is to approve the remuneration of the directors for the year ended 31st December 2021. I now request the company secretary to read out the proposed resolution and confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to receive, consider, and approve the directors' remuneration report and the remuneration paid to the directors for the year ended 31st December 2021. Chairman, Geoffrey Maoga has proposed and Ruben Gesheha has seconded the motion.
Shareholders, as the resolution with respect to the directors' remuneration report for the year ended 31st December 2021 has been proposed and seconded, I now put it to the meeting for voting. Shareholders, I will now call upon Dr. Edward Odudo, an independent non-executive director of Equity Group Holdings, PLC, to take us through the next agenda item. Dr. Edward.
Thank you, Chairman. Dear shareholders, Agenda 4 is on the election of directors. The following non-executive directors are due to retire by rotation at this meeting and, being eligible, offer themselves for a re-election. Professor Isaac Macharia, non-executive chairman. Jonas Mushosho, non-executive director. The profiles of the two directors are in the integrated report on page 250 and 251 respectively. I now request the Company Secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Dr. Odundo. Shareholders, the resolution put forward to you is as follows. To approve the appointment of Professor Isaac Macharia, who retires by rotation in accordance with Article 100 of the Company's Article of Association and, being eligible, offers himself for re-election. Chair, Mary Waiboshi has proposed and Esther Kinyua has seconded the motion.
Shareholders, the resolution on the re-election of Director Professor Isaac Macharia has been proposed and seconded. I now put it to the meeting for voting. I will ask the Company Secretary to continue with the second part of this agenda.
Thank you. Shareholders, the resolution put forward to you is as follows. To approve the appointment of Mr. Jonas Mushosho, who retires by rotation in accordance with Article 100 of the Company's Article of Association and, being eligible, offers himself for re-election. Chair, Anthony Maundu has proposed and Andrew Kiarie has seconded the motion.
Shareholders, the resolution on the re-election of Director Mr. Jonas Mushosho has been proposed and seconded. I now put it to the meeting for voting. I now hand over back to the Chairman.
Thank you, Dr. Odundo. Agenda 5 is to approve the election of the following directors, being independent non-executive directors and members of the Board Audit Committee, to continue to serve as members of the said committee. Dr. Edward Odundo, non-executive director. Mrs. Evelyn Lutagweda, non-executive director and vice chairperson of the board. Mr. Vijay Gidumo, non-executive director. And Dr. Helen Gishohi, non-executive director. The profiles of the directors are contained in the integrated report on page 250 and 251. I now request the Company Secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder for the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. In accordance with the provisions of Section 769 of the Companies Act, to approve the election of the following directors, being members of the Board Audit Committee, to continue to serve as members of the said committee: Dr. Edward Odundo, Mrs. Evelyn Rutagwenda, Mr. Vijay Gudumal, and Dr. Helen Gishohi. Chairman, Stephen Kimani has proposed and Zipporah Ndungu has seconded the motion.
Shareholders, the resolution on the election of the members of the Board Audit Committee has been proposed and seconded. I now put it to the meeting for voting. Agenda 6 is to pass an ordinary resolution pursuant to Section 721 of the Companies Act 2015 to appoint PricewaterhouseCoopers LLP as auditors of the company and to authorize the directors to fix their remuneration for the year ended 31st December 2022. I now request the Company Secretary to read out the proposed resolution with respect to the appointment of the auditors and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows. To appoint PricewaterhouseCoopers LLP as external auditors of the company pursuant to Section 721 of the Companies Act 2015, and to authorize the directors to fix their remuneration for the year ended 31st December 2022. Chairman, Samuel Mwangi has proposed and Joseph Mambutu has seconded the motion.
Shareholders, the resolution on appointment of external auditors has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we will now proceed with the special business of this meeting. The special business of this meeting is with respect to approval of the amendment of the company's articles of association as set out in the agenda. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the proposal put forward to you is as follows. To amend Article 90 of the Articles of Association of the company to allow the directors of the company to appoint, in addition to the managing director, other executive directors of the company to the board. Pursuant to Section 22 of the Companies Act 2015, the text of the special resolution is set out as follows. That by way of special resolution, Article 90 of the Articles of Association of the company be and is hereby amended by adding the phrase other executive director position of the company or executive director as applicable immediately after the words managing director wherever it appears. Chairman, John Boko has proposed and John Wandungo has seconded the motion.
Shareholders, the resolution to amend the company's articles of association has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we have now come to the end of the special business. As shareholders, as I indicated, voting will close at 2 p.m. and we encourage shareholders who are yet to exercise their voting rights to do so. The results, having been independently scrutinized by PwC, shall be published within 24 hours on the company's website. I will now ask the Secretary to confirm if there is any other business for discussion for which due notice was given.
Chairman, I confirm that there is no other business for discussion for which notice was duly given. Thank you, Chairman.
There being no other business of which notice has been duly given, I take this opportunity to thank you all for attending the meeting. And shareholders, that concludes the business of the 18th Annual General Meeting of Equity Group Holdings, PLC. I take this opportunity to thank our shareholders for supporting the business as it grows during especially a difficult time. Our stakeholders for helping us deliver on our social impact agenda, our board members for ensuring the highest standards of corporate governance is maintained, and finally, management for delivering the results. I thank you all for your attendance, and I declare the meeting now officially closed. I'd invite Bishop Kariuki to close with a word of prayer. Bishop Kariuki.
Thank you, Chairman, and let us pray. Our Father, we want to thank you once again because of the good meeting that we have had, our 18th Annual General Meeting. We thank you, Lord, for giving us a very smooth flow, and we bless you for all that you have done. Thank you because Equity Group Holdings is there because of your love. We want to agree with your word that We cannot do anything without you. We are where we are because of what you have done to us. We thank you for the love and the favor that we have experienced as Equity Group Holding over the years. And we want to pray that, Lord, even as we go forward, may your blessing hand be upon this organization. And more so in this year 2022, we pray that, Lord, may you help us to grow and expand. We also want to thank you for all the shareholders. We want to thank you for the board of directors. We want to thank you for the management and all employees. And we also want to thank you, Lord, for our esteemed customers, for they have been good. As we go forward, we pray, let your presence go with us. We pray for your blessings, and may your favor that has never failed continue to prevail in our day-to-day business. We thank you and we bless you. For this we pray in your precious name. Amen.
Very much, everybody. Thank you for your patience. Thank you to the service providers for doing an excellent job. Asanteni sana.
Mungu twaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Tunayo benki inayotufaa sisi wateja na wafanyikazi, tuko pamoja, lengo letu moja, kuyaboresha maisha ya watu, kujitolea kwa huduma bora, kuendelea kwa uaminifu, kuhudumia
Every day, over 15 million members are transforming Africa.